Do you know how the new tax deal could affect your child tax credit? This is a question that looms large for many parents right now. The child tax credit expansion, if passed in its current format, could bring about significant changes that can impact families across the board, especially lower income households. Understanding these changes is crucial in making informed decisions about your family's finances. So, let's not keep you waiting. Stay tuned as we delve into the details of what the new tax deal could mean for you. So, what does this mean for your family? Let's find out in the next scene. In the last scene, we discussed the potential impact of the new tax deal on families. Today, we delve further into the child tax credit expansion, which, if passed, promises to extend significant benefits to lower income families. A key aspect of this expansion is the increase in the maximum refundable amount per child. Currently, this is capped at $1,600, but under the proposed changes, it would rise to $1,800 for taxes filed this year, referring to the tax year 2023. The refundable amount would then continue to grow, reaching $1,900 in 2024 and $2,000 in 2025. The changes don't stop. The method of calculating refundability is also set to change. From this year until 2025, parents and caretakers will be able to factor in the number of children they have when determining the total credit amount they are eligible for. This leads to a more equitable credit amount, taking into account the financial realities faced by larger families. To qualify for the refundable version of the child tax credit, filers must earn at least $2,500. However, in tax years 2024 and 2025, filers could choose to use their earned income from either the current year or the prior year to meet this requirement. This is a significant shift that could benefit lower income families who might not otherwise qualify because they earn too little in a given year. In addition to these changes, the base child tax credit, currently valued at $2,000 per qualifying child, would be indexed for inflation for tax years 2024 and 2025. According to Eric Braunenkant, a New York-based CPA and head of tax at Betterment, this could result in a roughly $100 increase in the credit each year, depending on the rate of inflation. These changes could mean a more equitable credit amount for parents and caretakers. While there is still much to be discussed and decided, the child tax credit expansion holds the potential to significantly alter the financial landscape for many families across the country. But who exactly qualifies for this expanded child tax credit? Stay tuned to find. Previously, we explored the overview of the child tax credit expansion. Now, who qualifies for this expanded child tax credit? Let's talk about eligibility. A key requirement to qualify for the refundable version of the child tax credit is that filers must earn at least $2,500. This income requirement is in place to ensure that the benefits of the tax credit are distributed to those who need it most. Now, you might be asking yourself, what if I don't make that much in a given year? Well, there's good news. For tax years 2024 and 2025, which are the taxes filed in 2025 and 2026 respectively, there's a bit of flexibility. Fillers can opt to use their earned income from either the current year or the prior year to meet this requirement. So let's say you had a great year in 2024, but then hit a rough patch in 2025. Even though your income dipped below the threshold in 2025, you can still qualify for the credit by using your income from 2024. This option provides a safety net for families experiencing fluctuations in their income. Perhaps, let's imagine you had a slow year in 2024, but then things picked up in 2025. You can use the income from the better year, 25, to qualify for the credit. This option can be a lifeline for families who are working hard to increase their income. These changes are designed with flexibility and fairness in mind, aiming to provide a more equitable credit amount. They take into account the realities of many lower income families who might have inconsistent earnings from year to year. In essence, this expanded child tax credit being designed to provide a more inclusive and adaptable system, one that recognizes the varying financial situations that families might find themselves in. These changes are especially significant for many lower income families who might not otherwise qualify because they earn too little in a given year. This flexibility ensures that more families can benefit from the child tax credit, providing crucial financial support when it's needed most. So, how will this affect the way you file your taxes? Let's explore that next. We've just discussed who qualifies for this expanded child tax credit. Now, what does this mean for the way you file your taxes? Well, let's dive into that. If the child tax credit expansion passes, it's going to change the game for tax software programs. Most of these programs are designed to accommodate current tax laws, but with this expansion, need to be updated. The new maximum refundable per child will be incorporated into the software, adjusting the calculations accordingly. Means for tax years 2024 and 2025, the software will automatically calculate your refundable amount based on the increased figures. The great news is this will be done behind the scenes. You won't have to worry about doing any of the math yourself. The software will take care of it for you. So, whether you're using a desktop program or an online platform, rest easy knowing the changes will be implemented seamlessly. This means filing your taxes should become a lot easier. But what other changes can we expect from this expansion? Keep watching to find out. In our previous scene, we discussed the potential impact these changes could have on tax software programs. Now, let's move on to our main topic today. What other changes could we expect from this expansion? Well, in addition to the increase in the maximum refundable amount per child and the modifications to the refundability calculations, there is another significant change on the cards. The base tax credit, which is presently worth $2,000 per qualifying child, could be adjusted for inflation for the tax years 2024 and 2025. Now, you might be wondering, what exactly is this indexing for inflation and how does it affect you? Let's break it down. Indexing for inflation, a technique used to adjust income payments by means of a price index to maintain the purchasing power of the public after inflation. This means, in simple terms, the value of the base child tax credit would increase in correlation with the rate of inflation. So, if the cost of living, so too would the value of the tax credit. This is a significant development, as ensures that the value of the tax credit does not diminish over time due to raising prices. Instead, it would maintain its value, giving parents and caretakers a consistent financial boost. This change is designed to make the child tax credit more equitable and effective in providing financial relief. It recognizes the financial challenges faced by many, particularly in times of economic uncertainty, and aims to provide a buffer against those pressures. Now, you may ask about how much this could potentially increase the credit. Well, according to Eric, a New York-based CPA and off-tax at Betterment, this could amount to a roughly $100 increase in the credit each year. Of course, this is dependent on the rate of inflation, which can fluctuate. So, while the exact figures might not be predictable, intention behind the change is clear: to provide greater financial assistance to families and to ensure that the child tax credit keeps pace with the cost of living. Depending on the rate of inflation, this could amount to a roughly $100 increase in the credit each year. So, what does all this mean for you and your family? Let's wrap it up in the conclusion. So far, we've discussed the changes and their potential impact. Now, what does all this mean for you and your family? Well, let's break it down. If the child tax credit expansion passes in its current format, it could bring significant financial relief to families, particularly to those at lower income levels. The maximum refundable amount per child would increase from the current $1,600 to $1,800 for this year, and would continue to grow to $1,900 in 2024 and $2,000 in 2025. But that's not all. The way the refundability is calculated would also change, making it more equitable. Parents and caretakers would be able to factor in how many children they have when determining the total credit amount they're eligible for. This could potentially mean a more tax credit for larger families. The eligibility criteria for the refundable child tax credit is also set to change. Filers would need to earn at least $2,500 to qualify. However, in 2024 and 2025, filers could use their earned income from either the current year or the previous year to meet this requirement. This change could be a game changer for many lower income families who might not otherwise qualify because they earned too little in a given year. Additionally, most major tax software programs will update to reflect the new maximum refundable amount per child if this expansion passes as proposed. This means you won't have to worry about calculating these changes yourself. The software will do it for you. But wait, there's more. The base child tax credit, currently worth $2,000 per qualifying child, could also see a change. It would be indexed for inflation for the tax years 2024 and 2025. Depending on the rate of inflation, this could mean an increase of roughly $100 each year. In summary, the proposed child tax credit expansion could bring significant financial benefits to families, particularly those at lower income levels, from an increase in the maximum refundable amount per child to changes in the way refundability is calculated and shifts in eligibility criteria. These changes could make a substantial difference in your family's finances. Remember, understanding these changes in the child tax credit expansion could make a significant difference in your family's finances. Stay informed and make the most of these potential benefits.